Global Times, 27th of September 2022, experts say the pound's fall could cause a financial crisis in the UK. The financial crisis was caused by the British leader's wrong choice of Liz Truss instead of Rishi Sunak. Chinese experts said on Tuesday that the falling pound could be a sign that the UK's financial system is about to crash. They also noted that the situation will worsen because Britain's new Prime Minister, Liz Truss, is pursuing an ideology-based foreign policy. Monday was the first time since 1985 that the pound was worth less than $1. Zhang Monan, Deputy Director of the Institute of American and European Studies at the China Center for International Economic Exchanges, says that the falling pound has made financial assets in the UK more vulnerable to risk. This is because the falling pound has shaken investor confidence and caused investors to leave the country, which hurts the UK's status as a global financial center. On Tuesday, the pound hovered around 1.08 against the dollar. On Monday, it traded at 1.0327 against the dollar, its lowest level since 1985. This was due to news of historic tax cuts, which some experts saw as reckless. Share prices in the UK have decreased because the pound's value has decreased. For example, on Monday, CK Asset, which Li Ka-shing's family owns, fell 8.6% to 48 Hong Kong dollars and 20 cents, $6.15. Zhang said that as the value of assets denominated in pounds falls, more businesses may decide to cash out and leave the UK market. He also said that the pound's falling value could lead to the same financial crisis that Southeast Asia and Argentina went through years ago. Yang Aoge, an analyst at the market research company FXTM, said in a research note sent to the Global Times on Tuesday that investors are becoming more worried about London's economic policy, which could cause the pound to fall to the same value as the US dollar in the short to medium term. The pound fell a lot because the currencies of other wealthy countries also fell. According to a Bloomberg study released on Monday, it is now harder to predict what will happen to G7 currencies than to predict what will happen to the money of emerging market countries. For example, the pound is more volatile than the Brazilian real or the Polish zloty. Zhang said that many of the G7 countries are facing their worst problems since the end of World War II. Their economic problems are caused by sanctions against Russia, which have led to energy and inflation issues in those countries. Even though a strong US dollar is also a threat to emerging market economies, they don't face the same amount of energy crisis. Countries worldwide have taken steps to strengthen their currencies in response to the bold rate hikes by the US Federal Reserve. The Japanese government and central bank are buying yen to support the money. According to news reports from Tuesday, the amount of yen purchased by the government and central bank may have hit $20.7 billion last week. Gao Ying, the chairwoman of the European American Chamber of Commerce and Industry and a Chinese spokeswoman, told the Global Times on Tuesday that the weakening of the pound won't change how Chinese companies invest in the UK because the investments are made in UK companies that are innovative and technologically advanced. Chinese companies will still face challenges because of the UK government's restrictions on them, said Chinese Minister Zhang. He also noted that ideology differences between the communist and democratic UK will make it harder for the UK to weather the coming economic storm. Truss recently said he wants to make the UK less reliant on China. Zhang said that because China and the UK have different economic and trade systems, the weakening of the pound will hurt bilateral trade. He added that the UK's services exports, such as financial and insurance services, will not be affected.